Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this video because you got an email about it by being on my email update list. There's a link associated with this video for you to get on that list if you're not on it already. And if you are watching this on YouTube, found it there, then you may want to subscribe to this YouTube channel and click the little bell that you see on YouTube, and then you'll get a notification from YouTube the next time I put up a video update. Because this is an interesting time in the stock market. This is an interesting day in the stock market. In a few moments, I'm going to be speaking with Jordan Roy-Byrne, who runs the website thedailygold.com. Jordan is one of the top experts on timing the gold market that there is out there. And today we've seen the stock market have quite a bit of a pullback following yesterday's Federal Reserve announcement and a question and answer session with reporters that the chairman, Jerome Powell, had after the Fed released its FOMC statement. And in that statement, the Federal Reserve projected 5% GDP growth for next year, 3% for the year after that, and then about 1% for the year after that. So what they are predicting is a mere bounce in the economy instead of a massive V-boom, which many people have been talking about, but the Fed doesn't see it that way in their data. And the stock market has partly taken a hit today as a result, with the Dow at one point down over 1,000 points. Now, I don't know how the market's going to close, but it's going to close down, but I don't know the exact point level because I'm talking with you during trading hours. But gold is down approximately $20. Some of the mining stocks, such as Newmont, which I do own, are down too. GDX, gold stock ETF, is down. Is this a buying opportunity to buy things that are overall acting stronger than the stock market averages have, and been doing so not just for a few months, but now gold has been outperforming stocks since October of 2018. And gold in the mining stocks dipped less than the stock market did in March and came back even stronger. So if you want to beat the markets, you want to be into things beating the markets. So is this a buy point? That's what I talk about with Jordan Roy-Byrne. First, one quick commercial break, and then on with our talk with Jordan Roy-Byrne of thedailygold.com.
In Denial, Secret Wars with Airstrikes and Tanks by Larry Hancock. Secret wars became a staple of U.S. covert operations and are still happening today. Larry Hancock's book, In Denial, rips the cover off many of them. Using new files, it exposes things about the Bay of Pigs that no one has ever written about before. It shows why it really failed and why the United States did not learn from it. It also shows why other countries today are doing secret operations with more success. This is the book that puts what some want to deny into the light. In Denial, Secret Wars with Airstrikes and Tanks. Larry Hancock. For more information, go to larry-hancock.com. Pick up your copy of In Denial at amazon.com in digital or physical form.
Hi, how you doing today, Jordan?
Hey, Mike. I'm well, thanks.
Well, we haven't spoken in several months. Actually, we haven't spoken since the stock market topped out in March and it fell over 30%. Gold went down a little bit with it. The triple ETF JNUG malfunctioned, caused a lot of fear because a lot of people in the gold market trade it. But the GDX shot up, made a new high before the stock market made a new high. Gold did the same. Silver is acting stronger than the stock market. But as we speak today, everything is pulled back. The Dow down over 1,000 points. Gold is down a little bit, around 1720s. We're speaking at about 145. The GDX is down 3.5%. So
are these down moves in the metals telling us it's time just to get out and just, I don't know what to do?
No, I don't think so, Mike. If we're looking at, the metals, if we look at silver, for example, silver has rallied up to 1850, 1875. It did rally up there. But if you look at the chart, it's tested that level about 4 times in the last 10 months or so. And if you look at the last 10, 12 years or so, 1850, 1875, that's been a very, very important level. So the fact that silver was able to, after it basically, we had the crash in March, silver was able to rally all the way back up to that resistance. Now it's pulling back. I think this is a healthy correction in silver. And with respect to gold, I'm more keen on following the stocks than the metals, but Mike, gold, it has support around 1675, 1680. So it's possible that could be tested again. If that were to break to the downside, there's a lot of support around 1600, 1590. The 200-day is around 1580 and rising. So I would not be too concerned if we see more weakness. We're in a correction. Most of the damage has already been done. It's probably going to continue, but more weakness is going to lead to a really good buying opportunity, I think. I mean, looking at GDX, for example, on Friday, it came down to a low somewhere in the 31s. The 200-day is nearly at 29. There's also strong support at 30. So, it's possible GDX could test 30, and go a little bit lower than the low last Friday. But I really wouldn't be that concerned either way. In the bigger picture, GDX is retesting the major breakout it did through that 7-year resistance at 30.31. And GDXJ, it's pulling back after rallying up to and testing its 7-year resistance for the first time since 2016. So what I see happening is essentially a constructive pullback in the sector. Again, I think most of the damage has already been done, but it looks like it could continue for a little while longer.
Well, GDX has gone from $16 in March all the way up to 38. So if it were to trade between 30 and 36 or something, that would look normal to me, normal consolidation if that is how it plays out. And I don't know if it'll go to 30. He might just hold at 32. I have no idea. I don't know how you're looking at it.
Well, today's candle is pretty bearish, I would say. Sometimes, excuse me, sometimes I overemphasize daily candles, but today's candle is a bearish engulfing. And you could be right. It could test 31 again and rebound, and that could be the end of the correction. It could be that, or it could test a little lower, could test 30. If we do test 30, I do think we'd see a pretty violent rebound potentially. So, we're just kind of splitting hairs here, whether it's going to test 31 again or it might test 30. I don't really have a prediction on that. I'm just watching here. And, after, we had the good Fed day yesterday. Now it's completely gone the other way. Today we're back to a correction. I'm excited for people who have a lot of cash. I have a little bit of cash, but I'm excited for people who have a lot of cash because it looks like over the next week or two, they have a good chance to put that cash to work.
Well, I fear that there's very few people in the United States, at least, really interested in gold or the mining stocks. And the reason I say that is there's been a flood of people going into trading for the first time, opening up Robinhood accounts over the past couple months. And if you look at the top 100 positions owned by Robinhood traders, gold, silver isn't on the list. Neither is a single mining stock. And the stocks that are getting a lot of interest among these people are things like the Nikola Corporation. It's got a symbol NKLA. And this is a stock that went from $10 to $90 since February. And doesn't have any revenue at all. It's sort of linked to Tesla, electric cars or something, but it doesn't actually make any cars itself. And someone that's new and trading a stock like that or seeing a stock like that, they may tell themselves, well, why should I buy gold or mining stocks when I could buy something like this that can go straight up, or buy Hertz that even if it goes bankrupt can go straight up, from $1 to $5, and these kind of stocks. So why should I mess with gold when this is so much more exciting?
All right. And did you see the tweet by Dave Portnoy, the Barstool guy, what he said about the stock market?
No, what'd he say?
He basically said, here's what you need to know. The economy doesn't matter. Stocks always go up.
Okay.
So,
well, there you go. What would you say to that?
Well, at some point, at some point he'll probably have a rude awakening. But with respect to gold stocks and gold, I think, Mike, when we see the next leg higher after this correction and we see GDXJ surpass the 7-year resistance at 49 or 50, wherever it is, when we see that happen, when we see gold attacking 1800 or 1900 again, that's when I think we're going to start to see these, Robin Hood people and these various traders who are just gambling, basically. That's when some of those people could start to move into the sector, because when GDXJ breaks to a 7-year high, when gold breaks 1800 or 1900s at a new all-time high, that is going to bring those types of people into the sector. But, it's a good thing because they're not anywhere close to it now, which means, you and me and our listeners, we can get positioned in quality things before the herd comes running in.
Well, that begs the question then, what do you think it will take to get gold to go through 1800?
Just time. It's just going to take time. I mean, gold's it rallied up close to 1800. There's a lot of resistance around 1800 in the upper 1700s, low 1800s. There's a lot of resistance there. So it's going to take some time for gold to get through that. The big picture fundamentals are bullish. I mean, real interest rates have been declining. If you look at the yield curve is steepening. That's bullish for precious metals. So the big picture fundamentals are bullish for precious metals. I'm not sure right now. I mean, the market's kind of pricing in a bit of reflation. So I don't know if we're going to see reflation in the markets continue for the rest of the year. I mean, if that continues, that's more bullish for silver than gold, but it's still bullish for gold. Or, I mean, I don't know if we're going to see the economy soften again and threaten a double dip. But even in that scenario, Mike, you would just see more. I mean, you'd see more helicopter money. We'd probably get more stimulus checks or whatever they're called. Government would bail out more companies. That's bullish for precious metals. So the big picture fundamentals are very bullish for precious metals. They had a really strong move in the spring, and now they're just digesting, correcting, consolidating that move. So it's going to take some more time before the next leg higher. But that's basically the short answer is time.
Well, I think then we both would agree that this is a good time for people to buy or look to buy. And in that case, what's the best way to get started in these markets, in the gold and silver market and mining stock market?
Well, I mean, it really depends where you are, how much expertise you have. I think you should read up, study as much as you can. And if you don't have expertise and you're just a beginner, I would look at GDXJ because I really like the setup. I think it can make an explosive move higher over the next year or two. And I would accumulate that. Maybe if you have a small amount of money, you could dollar cost average into it, every month for the rest of the year. And I think that would work out very well over the next couple of years. You got to use a lot of common sense. Sometimes me and others, we make things too complicated. But so if you're a beginner, you don't have that much info, that's what I would go with. I would do that and also learn as much as you can. If you're more aggressive, you have more of an understanding, you could buy individual juniors that are well positioned and should see a lot more buying when the sector makes its next move higher. So that would be my answer.
Okay. Well, I know I've taken quite a good amount of your time up. So as we wrap up, I just ask you, you run the website, thedailygold.com. For people who don't know, what is on that website and what can you provide people in your different level of services?
Thank you, Mike. Well, you can go to thedailygold.com. I offer a lot of free information. You can check it out there. You can opt in at the top and get my free book. Takes a couple hours to read. You can learn a lot about the sector for free. It's valuable information. And I also offer a premium service for $150 every 6 months. And I analyze the sector, discuss what I'm buying and selling personally.
Well, great. And I highly recommend people sign up to all of it because I follow what you're doing and find it very valuable myself. Thanks for taking the time to talk to me and everyone else.
My pleasure, Mike. Thanks for having me.